Hey guys, Sean here. Silver is very different from gold. What affects gold doesn't necessarily influence the price of silver. A lot of us believe that gold and silver they are conjoined twins connected at the hip, but that's not really the case. Now, if we take a look at silver, it's down almost 13% during this recession, while gold is down less than 2%. So this already hints to us there is a big disconnect between the two. There's a reason why of my precious metal holdings 80% is gold, and it's not just because gold is less volatile than silver, it's because their stories are very different today. They might have served the same purpose 100 years back, but all that has changed. And if you're buying silver because you reckon it's a cheaper version of gold, better alternative, you are buying it for the wrong reasons, you might get disappointed down the road. Now, I want us to put our passions aside and have a sober conversation about how different gold is from silver. Trust me, I've heard it all. The silver squeeze theory, how silver will come back as money, how silver will bankrupt the big banks. So let's quickly look at the similarities between gold and silver. They are precious metals, they are hard assets, and over a long period of time, they protect purchasing power. But the numbers don't lie. Since 2000, gold has outperformed silver with a gain of 530% versus silver's 300%. So gold is a better preserver of value, and in the ultra long term, since the end of Bretton Woods in 1971, gold has returned 4,200%, while silver has only gained 1,200% in price. That is a big differential we can't ignore. However, at two points in time, silver's price spiked so hard in 1980 and 2011 that it eclipsed gold in terms of gains. Then a while later, the price just came crashing down to earth. And this tells us something about the nature of silver and the mindset we need to have before we buy it. Because while gold will be more stable, silver does have that moonshot potential. It can double, triple, or even 5 times in price down the road. But if your mind is wrapped around it being as good as gold and a stable store of value, you won't be able to lock in those gains before it crashes, right? I really want us to understand the true differences between gold and silver today and how things will likely continue to diverge even further down the road. And we need to start at the beginning. For thousands of years, gold and silver they have been used as money and a store of value. From Rome to ancient China, the world has been using precious metals for trade. But that was then. Things are vastly different today. If we take a look at silver's demand in 2021, we can see that 51% is industrial demand. The majority of silver actually flows into industry to make solar panels and manufacture electronics. Only 48% of silver is bought as a store of value, and I'm counting in jewelry and silverware as well. However, for gold, almost 92% of demand is specifically to store value. This includes the gold coins, gold jewelry, and the big gold bars that central banks buy. And this is an important distinction we have to appreciate and be aware of. That's why even though inflation is sky high today, the price of silver is getting smashed to the ground more than gold. It is seen less as a store of value and more than half of its demand goes into manufacturing stuff. And guess what? We are in a recession. GDP is contracting, and now we have US manufacturing output starting to decline. Now, this is a leading indicator that shows we are slipping deeper into a recession, even if the Fed is denying its existence. Industrial production has started to decline since May this year, and this adds an additional layer of pressure to silver as industrial demand for it will also drop. So, even though silver is affected by inflation and crazy money printing, if the economy slows, the silver price will be affected as well. And we're already seeing a decoupling of the silver and gold price movements, most recently in 2020. Remember when the Fed started printing trillions of dollars in early 2020 during the lockdowns? Gold reacted as expected, skyrocketing in price. Silver, on the other hand, actually crashed even further from $18 to $14 before catching up to the reality of money debasement. Now, why did that happen? It's because manufacturing crashed during 2020 and this affected silver in a massive way. Remember, over 50% of silver's demand is industrial. And this also happened back in '08. During the Great Recession, industries were also clobbered and this caused silver prices to crash until the Fed decided to drop helicopter money. So the first takeaway is that silver is greatly affected by the strength and health of the economy, and because we are moving towards a deeper recession, we need to prepare for further headwinds going forward. Now let's talk about the gold-silver ratio. Let me tell you of the secret fantasy all of us silver stackers have. We all point to the 15:1 gold-silver ratio and we want a revaluation to happen. Now, the Roman Empire set the ratio at 12:1, and the US government fixed it at 15:1 in 1792 with the Coinage Act. But those are government mandates, yet nothing to do with the free market. What we have right now is the true gold to silver ratio dictated by the free market, and it currently sits at around 88-89 today. So we can see that ever since 1971, the gold to silver ratio has never visited 15:1, and that has been fluctuating between 50 and 75 for the last few decades, and the closest it got back in 1980 was 17:1. But there were also times it spiked above 110 during the lockdowns, so it's very dangerous to lock ourselves in a mindset that silver and gold will be revalued like back in the ancient days. And this is coming from someone who has over 1,000 ounces of silver stashed away. If it really revalues to 15:1, I'll be jumping for joy and then exchanging them for gold. But it's highly unlikely that you ever fall that low. We have just moved on from silver being a store of value and money. Today, it now serves a dual purpose. It's a precious metal and as well as an industrial metal. So let's say another war breaks out tomorrow, we could see gold fly to the moon while silver crashes because the economy is in trouble. Two totally different metals with different dynamics. They share the same historical roots, they came from the same idea of hard money, but that belief in silver is now diluted and we need to accept that. Now, another important conversation we need to have is how gold and silver react during a recession. What happens during a time of crisis? Now, whether it is a recession or stagflation, silver is trailing gold in terms of performance. If we take a look at this chart that collates all of the stock market crashes, we can see that gold is much more resilient than silver during downturns. Gold preserves value better than silver during some of the biggest declines of the S&P 500. But let's take a look at the stagflation era of the 1980s. That was the time when inflation was soaring above 14% and Volcker had to hike rates above 20% to wrestle it down. And we can see that everything fell in price, right? Gold fell by 46%, while silver collapsed by 66%. A bigger crash happened because there was a double whammy for silver. Not only did money leave the system thanks to the rate hikes, but a recession caused industrial demand to crater. And it's the exact situation we're seeing now, with gold down 2% and silver down almost 13% or more. And if you want to see silver perform its best, we need the conditions of both a booming economy and easy money, right? We want to see both low interest rates and low inflation because that allows industries to grow and produce more stuff. And that means industrial demand for silver will go up and that will benefit the price. So it really shouldn't come as a surprise that silver is lagging behind gold right now. Even during the midst of the Russia-Ukraine war and all these China-Taiwan tensions, because gold responds more to chaos and uncertainty, while silver needs the stability of a growing economy. So even if a conflict breaks out, the gains from inflation risk might really be overshadowed by recession fears, and this is really something that you need to think about. So what are the upsides to silver? Why do people still buy silver? Why do I still hold some silver? Now, the first reason is straightforward. Silver is much cheaper than gold, and not everyone can afford $1,800 an ounce. One silver ounce today is around $28, so it's still highly affordable. And secondly, I believe we are going to move towards a greener future sooner or later. It's going to happen, guys, and this is only going to accelerate once this war ends. Now, the world today, especially Europe, they understand how vulnerable it is to just rely on fossil fuels. So there's definitely going to be a push into renewable energy such as solar power, and that requires a whole lot of silver. Now, in fact, Congress is discussing a $370 billion clean energy bill that will bring down the cost of solar panels and make electric vehicles cheaper. And this is just going to be the beginning. I think years down the road, there's going to be more and more subsidies to really build green technology up, and that means more industrial demand for silver. So in the future, we will likely have more deficit spending, and a large part will flow into sectors that will benefit silver, and that's a double win long term. And because silver is a much smaller market compared to gold, it has the ability to give much higher returns if you're trading it or you're willing to sell your stash at a high point. Now we can see that silver's average volatility is around 30% and can spike to over 90% like back in 1980. That's why we have all these beautiful spikes in silver back in 1980 when the Hunt brothers cornered the market, and back in 2011 during the debt ceiling crisis. So if you're a trader or you're willing to sell your physical when it enters bubble territory, you can really make out like a bandit, while gold is something to just sit and hold for the long term. And let's finally address the elephant in the room. Is silver going to come back as money? Now, I want to re-emphasize that I have quite a bit of silver and nothing will make me happier than silver returning as money. But the fact is that silver is behind the ball on this one. We need to use common sense to really think through this. The biggest stackers of precious metals in the world are central banks, and they only exclusively stack gold in their vaults, not silver. Almost every central bank in the world, from the United States and Germany to China and Singapore, they all own gold because they know that it is a stable asset that maintains value over a long period of time. So let's say a country decides to back up their currency with precious metals, or somehow we return to a commodity-backed money. Which do you think central banks and governments will prefer? Gold, which they hold a lot of, or silver, which they hold none of? I hope the answer is obvious here. And this means if gold prices fall far enough, we could actually see central banks come in to buy more gold to shore up their reserves, and this adds more support for gold prices than silver. Now, the main buyers of silver won't be governments, but private industries, big institutions, and investors like you and me. So in a sense, there's less of a safety net for silver prices. But of course, if the amount of gold isn't enough to account for all the insane amount of paper currency floating in the world, then silver can come back into the picture. It is second in the queue, but if its turn comes, the price will skyrocket. But we need to be sober and understand that this is a crapshoot. This is a near fantasy scenario that might never materialize. So don't pin your hopes on some silver standard coming back. And that's why if you're buying silver, you need to be doing it for the right reasons. Do you believe that green energy is the future? Do you want to hold some wealth outside of the system? Is gold currently too expensive for you? And these are questions that you need to ask yourself and not stick to the same old beliefs that gold and silver are the exact same thing, right? Silver has the potential to go to the moon compared to gold, but during a recession or over a longer period of time, gold will win out. And I need to emphasize here once more, the world today sees gold much more as a precious metal, while silver is a dual purpose metal. Half of it is to store value, while the bigger half is an industrial metal. So if you're stacking silver today and expect it to strike big in the next 2 or 3 years, $100 silver might not materialize, guys. However, if you're storing wealth for future generations and you're willing to sell once it reaches bubble territory like back in 2011, then silver makes some sense. But if you need a more stable store of value and you just want to sit on your investment, then gold might be a better choice. So let me know what you think. Are you buying silver for the right reasons, or are we going to the moon in the next 12 months? Let me know in the comments below. Stay safe, and if you enjoyed today's video, be sure to smash the like button and subscribe as we navigate through this recession. Thank you guys for watching, and I'll see you soon.